Hello, everyone, and welcome to another quarterly update and Q&A brought to you by the team at Apollo Crypto. I'm Marc Woodward, investment partner, and as always, it's a pleasure to be joined by Henrik Andersson, founder and chief investment officer of Apollo Crypto, and who leads our investment team. Hi, Henrik.
Hi, Mark. How are you going?
Very well, thank you. For everyone new, Apollo Crypto is a multi-strategy investment fund manager that is based in Melbourne, Australia, and invests globally. We have a more than 6-year successful track record with 3 active funds, and we are focused solely on managing portfolios of crypto assets and strategies on behalf of wholesale investors, family offices, and institutions. Thanks very much to the audience for attending. We hold these on a quarterly basis and also publish a weekly newsletter along with long-form quarterly research. Please head to our website at apollocrypto.com to subscribe and to find previous research and blog posts. The crypto markets continue to be fast-moving and exciting, so we'll certainly have a lot to discuss today. And as always, we are happy to take questions from the audience, so please submit any questions as early as you like through the Q&A feature, and we will answer these towards the end of the webinar. The purpose of this webinar is to inform our investors and followers and to provide a general update on the markets. As a reminder, this is a general discussion and is not to be taken as financial advice. Please do your own research when considering an investment in the crypto markets. With that having been said, we have a slightly different format this time, where we will be sharing some slides and graphics along with our updates. So happy to kick that off now. And again, if anybody has any questions as we go along, please fire them through on the Q&A feature. So our agenda today is, first of all, to talk about the Q1 2024 recap. So to cover sort of the major events, as well as give a bit of a market perspective. Certainly some of the big action that happened in the quarter was the approval of the Bitcoin ETF launch. We're seeing a lot of activity around the Ethereum ecosystem and how that will scale going forward. And we'll also be touching on a couple of portfolio highlights from the Apollo Crypto Fund, some early stage investments that have been hitting certain milestones and achievements. Henrik will be giving a 2024 outlook, and then again, we'll certainly be happy to entertain any Q&A. So just to give a bit of perspective on the crypto markets relative to the equity markets, both markets have had a very good 12 months with the crypto markets really outperforming starting in January with the expectation and then the actual approval of the Bitcoin ETFs, as well as probably a more positive sentiment in the marketplace, given that some of the headwinds of the previous cycle are hopefully behind us. As you can see, Bitcoin was the standout performer, with Ethereum not far behind. Many other tokens in the market have also done very well, and we'll touch on a few of these in our presentation. So for those that are new to Apollo Crypto, the Apollo Crypto Fund is our flagship fund. It is a diversified portfolio of crypto assets and strategies that are designed to give investors broad exposure to the crypto markets. So we focus on a few areas. One is blockchains, which are the base networks that all of crypto resides on. Decentralized finance, which is the area of crypto where traditional financial activities like exchange, lending and borrowing, options, and derivatives trading are being implemented and perfected. We also invest in infrastructure, both for NFT and Web3 gaming. We don't actually invest in the games or the NFTs themselves, but the underlying infrastructure. We also invest in general blockchain infrastructure, as well as make primary investments. So primary investment is where we are some of the earliest investors in a pre-token project, and we'll be highlighting a couple of these at the end of the webinar. As you can see, the fund has done very well since inception, has outperformed in the last cycle, and has continued to do so across 2 cryptocurrency indexes. The Apollo Crypto Fund returned 96.6% in calendar year 2023, and is up 39.9% year to date through the end of March. Henrik will be giving an outlook later in the webinar, but certainly it's, I think it's quite positive going forward. And plus we have several upcoming token launches in the portfolio scheduled for 2024.
Yeah, so moving on to some of the market events in Q1, I think the Bitcoin US spot ETF approval was the standout event in the crypto markets. It was sort of a watershed moment for crypto markets, and we have seen tremendous inflow in the spot ETFs so far. There are around 13 billion that has gone into the ETFs so far in net inflow. So that's really a tremendous start for the spot Bitcoin ETFs. And if you look at the BlackRock, which is the biggest one, the IBIT, it's now in the top 100 of all ETFs in the US. There are over 3,500 ETFs listed in the US market, and that's top 100 now. So it's been the best start of any ETF launch ever. Why is this a watershed moment? I think the answer is that it just makes it so much easier for investors to access the crypto market. So wealth managers, other asset allocators can now easily get exposure to this new asset class. We have seen outflows from the Grayscale BTC Trust. So those of you that are not familiar, Grayscale was a closed trust that converted to an ETF. And because of the market dynamics, a lot of investors got into that when there was a closed fund, and those investors have been exiting. But the good news is that the outflow from Grayscale is getting smaller and smaller. If you look overnight, I think it was a record small outflow from the Grayscale Trust. So that's really bullish in our view going forward as well. We put out a blog post in December of last year where we made some assumption about potential inflows to the spot ETFs. And we wrote in that post that we could see $65 billion of net inflow into the Bitcoin ETFs over the cycle. 65 billion would mean 1% of the total US ETF market. We still think that's reasonable. We have again already seen $13 billion of net inflow, and that will continue to put an upward pressure on the price of Bitcoin as well as other crypto assets. And what we wrote in that blog post was that it's not unreasonable to see Bitcoin at 200,000 sometime in this cycle because of that potential inflow into the spot Bitcoin ETFs. So I think that kind of approval of the Bitcoin ETFs again was the kind of the main event, obviously, in the Q1 quarter. Another thing that we wanted to highlight in this webinar is the scaling happening on the Ethereum network. So I think that has been our thesis for our fund for quite some time now, that we will see really Ethereum scaling and kind of the composability and the network effect really happening on the Ethereum network. We do have exposure to other networks as well, such as Solana and Sui and Avalanche and other networks, but I think the thesis for Ethereum has really strengthened over the last year or so. And in the last 6 months and in the last 3 months, we have really seen that growth of Ethereum accelerate when we talk about the scaling. So Ethereum is scaling through something called layer 2s, and we have seen a tremendous growth of assets, as you can see on the graph right to the right on layer 2s. And we have seen a great growth of users coming to the layer 2s. So we have over 6.5 million users now on layer 2s. We can highlight Base as well as being very successful. So Coinbase launched a Base ecosystem, which is in Ethereum layer 2, and they have a tremendous amount of transactions and users that they have onboarded to Base. So basically, it enables users to transact with very, very low fees, which is really great to see. We're also early stage investors in EigenLayer, we have a graph here showing the growth of EigenLayer, which has really been tremendous, and we believe that EigenLayer will unlock 100x scaling of Ethereum. We can also highlight that EigenLayer went to mainnet just this week, so there was quite an achievement from that team to finally launch on mainnet earlier this week.
Henrik, I was just going to ask, could you just explain for the audience how EigenLayer works, why it's such an innovation, and the impact it'll have on the Ethereum ecosystem?
Yeah, absolutely. I can try at least. So previously, if you wanted to kind of bootstrap a new network, you needed to find validators and kind of the economic security to secure that network. And that's a really, really hard kind of uphill battle to bootstrap a whole new network. But with EigenLayer, you can tap into the Ethereum security through staked Ethereum, and you can launch a network that uses EigenLayer as a security layer to bootstrap a new network. So that just makes it so much easier to launch a new network. You don't have to kind of bootstrap the security yourself. You can piggyback on the EigenLayer network. So that's a huge unlock that EigenLayer enables. And I believe we will see thousands of networks launching on top of EigenLayer in the coming years. And that process just started this week, basically, with the launch of their EigenDA mainnet. So that was a pivotal moment, I believe, in the Ethereum scaling roadmap. And this is part of the kind of the modular ecosystem, and we have put out research reports on that modular kind of tech stack. So do check that out if you have kind of an interest in the scaling of this technology. You can find it on our website at apollocrypto.com. Moving on, I want to highlight a couple of investments that we made in the portfolio. So one of them is a network called Chainflip. So Apollo Crypto is an early stage seed investor in Chainflip. We made a first investment in December of 2020. And they went to mainnet late last year. And they are really innovating in something quite novel. And that's sort of where we like to invest, someone really innovating on the tech stack, enabling scaling, kind of core infrastructure. And what Chainflip does is that it enables native swaps between, for example, Bitcoin and Ethereum. So you can bypass centralized exchanges like Coinbase or Binance, and you can use Chainflip instead. So they're bringing real innovation to the market. They recently launched, and they are almost at $1 billion in transaction volume so far. So I think that's great to see. And it's good to be close to the team. We are active stakers of all the Flip tokens as well. So it's really great to follow their success. They're still kind of in early days, and I think they will ramp up their volumes in the coming couple of years. So still early days for them, but they're off to a good start. Another one that we like to highlight is Swell Network, where again, Apollo Crypto is a seed investor and early advisor for Swell Network. Swell Network is something called a liquid staking protocol. By the way, they work closely with the EigenLayer team as well. We have seen tremendous growth of Swell since they launched, and they have well over $1 billion now in locked value. We expect them to launch their token in the coming months or coming weeks, perhaps. So we are still super excited about Swell and the growth, and we believe they still have a lot of growth ahead of them.
Henrik, could you just describe, if I'm an investor, how I would use Swell? If I'm an ETH holder and I want to stake, what is that process? What are the benefits? And then some of the follow-on of restaking.
Yeah, so the Ethereum network moved from proof of work to proof of stake in September of 2022. So it was probably the biggest upgrade for the Ethereum network since its launch in 2015. And the move to proof of stake meant that you as an Ethereum holder can stake your ETH to help validate the network. And for doing that, you receive Ethereum inflation and also Ethereum network fees. So there is a yield associated with that. What Swell enables is that you don't have to go through the headache of setting up a validator yourself, but you can piggyback up the Swell network and their network of validators. And if you do that, you get a token in exchange of that, that represents your Ethereum stake. And that's what's called a liquid staking token. That can be freely traded as well. So that token actually has a price as well as a yield associated with it. So the liquid staking tokens are becoming very popular. Lido is the biggest one of them, but Swell has seen tremendous growth in the last 6-9 months as well, which is again really great to see. They're providing real value, and I think at Apollo we were early to identify liquid staking as an emergent growth sector in crypto, and that's why we partnered with the team to help them launch.
Just to highlight that, yeah, so Apollo was one of the first investors and is still an advisor to the team. And we hope that the token will launch over the next few weeks or so. So it's an exciting time for Swell Network and its investors.
Absolutely. Moving on to the outlook. I mean, I'm really curious what you think, Mark, about the kind of the macro outlook more generally. It looks like we will see capital rate cuts in the States this year, perhaps in Australia as well. So what's your take? Do you think we're entering another easing cycle?
Yeah, I think it's almost a certainty, in my opinion, that they will have to start cutting rates prior to the election. I mean, it's a very close election in the US, between Trump and Biden and perhaps Kennedy. I think they will have to do something to improve the chances of the Democrats, as well as to try to reduce the interest expense on the ballooning U.S. debt, which again is starting to become a political issue. Outside of sort of financial markets, a lot of people aren't sort of aware of it, but now since it's grown to $35 trillion and it's increasing by $1 trillion every 100 days, this is becoming a a very significant issue even among sort of average individuals. So I think they will have to for a couple of reasons. Number one, it's the the business cycle, as they say. There's an election coming up, and the amount of debt that is piling up in the U.S.
And lowering interest rates is usually sort of bullish for risk assets, where I think crypto probably falls into that bucket as well as tech stocks and other risk on assets. More crypto kind of focused narratives, but quite a lot of things happening in the markets. We have the Bitcoin halving coming up very, very soon. It's just over a week away. So that's coming up very, very soon. So for those of you that might be new, Bitcoin supply issuance is halved every 4 years. So that's coming up. Yeah, Mark, I know you looked at what was happening historically. If we look at Bitcoin, when this happens, I guess it's been kind of a bullish catalyst in previous cycles.
That's right. Certainly bullish over the subsequent, say 10 to 12 months. There is always a bit of choppiness around the halving. This is the first time that we've reached an all-time high prior to the halving date. So we're somewhat in uncharted territory, and plus having the Bitcoin ETFs with their sort of, their consistent inflows, I think has changed the game. So I think from a long-term perspective, I think it's a bullish meme. The actual impact to the issuance from a gross amount is getting smaller and smaller each halving. But I still think with the meme power and the ongoing inflows on a daily basis, compared to the new issuance, I think will be bullish.
Yeah, I sort of agree. Another strong narrative in the market right now is Bitcoin layer 2s. So there are a lot of projects and teams building on top of Bitcoin now. So we haven't seen a tremendous amount of activity on top of Bitcoin. Bitcoin has mostly been used as a store of value so far. Ethereum, again, is the largest network for smart contracts. So what people are doing, and a lot of teams are working on this, is creating layer 2s, so networks on top of Bitcoin that enables smart contracts that are secured by Bitcoin. So this is an emerging narrative, still early days, but at Apollo we've been talking to a few projects that are building these layer 2s. So we are in active engagement with a few of them. This could potentially be a narrative kind of that strengthens later this year and going into next year, we believe. We have seen the success of the Bitcoin ETFs, and there are a number of Ethereum ETFs in the pipeline as well, potentially. And SEC is actually need to make a decision on May 23rd about a couple of those ETFs. What we would say is that the market don't expect them to get approval. SEC hasn't been very clear when it comes to Ethereum and their stance on Ethereum, I think it's fair to say. We don't expect them to be approved at that point. Most likely it will be a longer process. Eventually we believe they will be approved, and they should be approved, to be clear. There's no reason for them to be denied, but most likely it will not happen in May. But most likely it will happen at a later date in our view. Anything you'd like to add there, Mark?
Yeah, I mean, I think the market is discounting the chance that ETFs will be approved. I mean, I still think there is a chance, but there is some silver in the lining of those dark clouds, and that if the approvals happen later in the cycle, that could actually be a bullish event We've only just recently had the launch of the Bitcoin ETFs in January. We're only sort of 3 months into the inflows. Adding Ethereum later on in the cycle could lengthen the cycle or smooth it out. Certainly we've seen in the previous cycles a lot of volatility, this 4-year cycle of sort of boom and bust, and that might get smoothed out with the amount of institutional and retail capital coming in from these ETF platforms. So a delay in the Ethereum ETF could be a long-term positive.
Yeah, agreed. And actually in Hong Kong, we have seen some interesting activity recently. So Reuters just reported today or yesterday that most likely we'll see ETFs approvals in Hong Kong this week for Bitcoin spot ETFs. So those could be listed during this month in Hong Kong. And Hong Kong is maybe surprisingly emerging as a crypto hub in Asia, together with Singapore and Dubai, I would say. So that's interesting activity happening there. Moving on to portfolio positioning, we still have a very bullish stance on the market. So our cash position are at low levels. We believe we are in a bull market, and a playbook in the bull market is to buy the dips. I think that's the right strategy. I don't think it really feels like a bull market, even though Bitcoin is at all-time high. And I think the reason is that I don't think the retail is back yet in the same way as we saw, for example, in 2021. So when we speak to exchanges, for example, they don't see at all the same activity on exchanges from retail as we saw in the previous peak. Looking at Google Trends and other things, I think confirms that picture as well. So in my view, I think we'll have to see kind of a breakout, above 100,000 for Bitcoin to really get that retail crowd back into crypto. And a lot of things have changed, right, since the last cycle. We have seen the failure of FTX and other centralized entities that are now out of the picture. Obviously, it did burn some retail investors as well. But we believe that once crypto is back in the headlines in a real way, we'll see a lot of people coming back to the crypto markets.
Henrik, do you think that argues for a longer cycle? So a more sort of drawn out cycle of investors coming back into the market? Or do you think that a lot of that interest has been sent into the Bitcoin ETFs? I mean, they've seen huge inflows. And so maybe some of that capital has been, sent through the ETFs as opposed to exchanges, which historically have not been safe, let's say.
Yeah, well, I think the ETFs have really unlocked a new kind of cohort of investors, which is great to see. Maybe more traditional investors that now can access this market through their regular brokerage account. So I don't necessarily think it's the same investors. I think it's opened the doors for new investors to a large extent. At least that's my view. I still think retail will come back at some point. But I think we're not there yet because, as you said, the market has been driven a lot by the ETF flow, not retail per se.
Yeah. And do you think the divergence in the price in between Ethereum and Bitcoin is simply due to the halving and the ETFs, or is there something else going on?
Yeah, I think that's the main driver. Obviously, that's been a little bit frustrating for a lot of crypto funds to see Bitcoin outperforming in such a big manner, especially in 23, it was a recovery year, right? And so Bitcoin outperforming big on the ETF narrative, which, Bitcoin has historically been seen as a low beta, a blue chip asset in the crypto space that tends to have a little bit lower volatility and doesn't really outperform on the upside, right? But I think at some point we will see that shift, perhaps after halving, where we'll see some of the money, some of the capital flow into some of the smaller coins. So we'll see, you know, what is called an alt season, I guess, in crypto, where some of the smaller assets will start outperforming big time. I think we'll see that happening in the second half of 24. So I think that will be kind of a big change in kind of in the dynamics of the markets going forward.
And so we just have a question about Ethereum being classified as a security potentially, even though it's, you know, I think this idea has been around for a few years. What's your sort of sense of that? And even if it did happen, what would be the impact to the crypto markets?
Yeah, that's a good question. Like SEC also, you know, send a Wells notice to Uniswap overnight. So there's a lot of moving parts in all of that. I think the conclusion from the last 12 months is that all of this action from the SEC and some of the lawsuits, they will basically take years and years to play out in the courts. So that's where kind of the decisions will be made around what assets are securities or not. Our view is that most of the assets out there are not securities. They should be treated like art or other commodities and other assets that are not viewed as securities. But you know, SEC has taken a very aggressive stance against the industry, and especially the head of SEC, Gary Gensler, has been quite aggressive. That could change with perhaps a new administration in the US coming in. There is election in the US, as most people probably know, in the second half of this year. But, you know, we have seen that, you know, SEC is not winning all of these lawsuits. We have seen that in the Grayscale case. We have seen that in the Ripple case. And I think we'll continue to see that if they try to go after Ethereum, Uniswap, Coinbase. You know, these are good actors in the space, and it's a bit surprising that they choose to come after them without giving clear guidance. But you know, I'm confident that the courts will make the right decisions.
And so how do we view Solana as an alternative to Ethereum? Certainly it's a holding in the fund. It's gotten a lot of activity over the past couple quarters. You know, their TVL has ramped up, and certainly the price action has done very well. How do we think about ETH and the ETH layer 2 ecosystem versus an alternative layer 1 like Solana?
Yeah, I think Solana definitely has a place in the portfolio. They have a strong community. They have seen a lot of activity more recently, especially in the meme coin space. We have seen tremendous amount of activity. And we have seen the Solana network being very congested, which means that a lot of transactions haven't gone through recently in Solana, which is a little bit disappointing, but it's basically due to the amount of activity they see on Solana. So it does have a place in the portfolio, and they're not going to go away. They have a strong community. Yeah, hopefully they can solve kind of the short-term issues that they are facing.
And so how do we think about L2s and how we allocate it into the fund? Do we see them as, you know, as competitors or, you know, or collaborators, you know, with each other and with Ethereum? How do we sort of break down those in the fund? Things like
so we are invested into Matic and OPI and Arbitrum and those kind of technologies. You know, they're all kind of positive, we think, to Ethereum. They're all adding to Ethereum, which is the key. Polygon, as an example, was historically a sidechain. Later this year, they will move to becoming a true Ethereum L2, which will kind of benefit Ethereum, more kind of aligned with Ethereum, if you like. so as a whole, I think they will kind of benefit the whole ecosystem, if you like, in Ethereum itself. You know, there's certainly some competition, if you can call it that, between Optimism and Arbitrum, but I think competition is good as well.
So we do have a question about Swell tokens. So just to be clear that they have yet to launch their token. We hope that will happen in the next few weeks to a month. But you can certainly follow their progress on, on Twitter, where they will have their announcements and updates.
Yeah, and I think the question is as well if you will add the token. So just to be very clear, we were an early stage seed investor into Swell and an advisor as well. So we have sort of exposure to the token, right?
So yeah, just a reminder, if anybody has any other questions, we still have a few more minutes, so please add some questions for Henrik or myself. So we did, you did sort of touch on alt season in the second half of this year. Are there any sectors or particular tokens that you think will do well in the second half of this year after the halving?
Again, I think BTC has outperformed. Ethereum has been underperforming. I think Ethereum will start outperforming, and I think some of the smaller kind of coins in the portfolio will start performing really well. So that could be some of the projects building on the L2s, or some of the networks that are building their own app chains. I think they will start outperforming in the second half of the year. And I think that will be very good for the portfolio as well. And that's how we have positioned ourselves. I've got one question. What are projects that have failed that Apollo has invested in? What have been key learnings?
Yeah, I wasn't sure if you wanted to answer that one or not. So yeah, go for it.
Yeah, I mean, I think, it's worth highlighting that, we are mainly a liquid fund. So we can be active. I think that's kind of different from many VC investors in the crypto space that have illiquid positions and they can't really change the view on something in the portfolio because they don't have that liquidity. But we do have that flexibility, which I think is great for us. So, we are always active. We have, previously been in a lot of different blockchain L1s, for example. And when they haven't gained traction, we have exited those investments. So if you have been with us for a while, you probably noticed that previously we had Algorand and Polkadot in the portfolio. Those are no longer there. We don't talk about them anymore. So it's a reason for that. We haven't seen kind of the growth we expected, the kind of onboarding of new users to those platforms. So that's something we constantly kind of monitor and actively manage the portfolio, right? So that's one of the benefits of running a liquid strategy.
And so in the last cycle, Ethereum NFTs were a big driver of activity on Ethereum, drove up the gas fees, made and lost a lot of money, and made some artists household names. What do you think are some of the trends for this cycle? Some that have happened, something like ordinals on Bitcoin or meme coins on Solana. Those have been all over the news. What are your thoughts on those? Do you think there's anything else that hasn't quite hit the zeitgeist yet?
Yeah, so like that's a good point. Like ordinals, meme coin, these are things that you couldn't really have predicted that meme coins would all of a sudden blow up in in the last month or so, or that someone would all of a sudden launch NFT protocol on top of Bitcoin. No one really expected that to happen. So our view is that a lot of that you cannot really predict. So that's why we focus kind of on the infrastructure, enabling all that. So when we see a lot of activity on Solana, that's positive for Solana, right? You know, Bitcoin owners are here to stay. Meme coins are probably here to stay as well. And there are a lot of potential applications that might be the next iPhone moment, if you like, in the crypto industry. That could be something related to social networks. There could be something related to decentralized AI or to something called DeepIn. There are a lot of different use cases, right? And we don't necessarily want to bet on which use case is next, but we want to kind of invest in the DeFi, in the NFT infrastructure, in the blockchain infrastructure, in the scaling infrastructure to enable, whatever is next. So yeah, that's kind of how we view the portfolio. And the next big thing that blow ups, we hope to have the leverage in the portfolio to benefit from that.
Yeah, and I think we do that through infrastructure investments, right? So it's very hard to predict what those are, but if you're investing in the underlying infrastructure of blockchains, that activity and value will accrue to those layer 1 or layer 2 blockchains, as well as other infrastructure applications.
Yeah.
So Henrik, is there anything you haven't been asked about that you'd like to touch on?
I think we covered a lot of ground. I probably forgot a lot of things that I should have said, but I don't know. Anything that comes to mind, Mark?
Yeah, I mean, I think investors would probably be interested more in the outlook. So, what is our view? Is this going to be a 4-year cycle? Will it be a volatile sort of boom and bust cycle like we've seen in previous ones? Or will it be kind of more of a moderate, slow burn, slow growth in crypto terms over the next few years? It seems like the macro environment is improving for all risk assets. The global economic and global geopolitical environments are as uncertain as they've always been. So there can always be sort of a black swan event that would come up to impact crypto or other risk assets. It seems like SEC enforcement is not really having the sort of price action that it had earlier in the year, even last year, when a Wells notice, would trigger alarm in the crypto markets. We sort of shrugged that off in about half an hour. So it's pretty interesting. I guess people are starting to realize that the SEC has not had a very good track record in enforcement actions. So hopefully they will get the message. Anyway, that's sort of a quasi question and answer at the same time. But, I think that's what I get asked about, most often. Have I missed it? Are we too late? Where are we in the cycle? How should we be thinking about cycles going forward? Are there structural things that have changed in the market that investors would need to know about? So happy to hear.
Hopefully as the class matures, we will see a little bit less volatility, I guess, over time. Volatility will still be there, and that's part of the attraction of the asset class as well. So it won't completely go away. Again, I think worth highlighting is that a lot of the bad players in crypto went under and disappeared from the industry in the previous bear market. So I think that's good going forward.
So I think we've answered just about all the questions. So maybe we will leave it there for this time. Certainly thank you to Henrik Andersson, and thanks to the audience for their attendance. Please don't hesitate to reach out to us at our website, apollocrypto.com. And we look forward to speaking to you next time. Thanks, everybody. Thanks, Henrik.
Thank you. Thank you.